And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride, and obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is, that you've missed the boat. We still have a long way to go. I think Trump knows what he has to do. He's got to print the money. He's got to hand out the goodies. And so the question is, how quickly is he going to hand out the goodies? What is the method at which they're going to do it? It sounds like, Besson and him are on board with doing it. The question is, how quickly is it going to happen? It's going to happen, whether it's today or a year and a half from now. The desire is there, and no government ever, when they have the printing press, refuses himself the ability to print money and hand out goodies to the people to win elections. It just doesn't happen.
Arthur Hayes begins by explaining that he was never anti-gold. In fact, he started buying gold as early as 2011, when prices spiked around $600. His skepticism wasn't about hard assets. It was about the system itself. Coming out of the 2008 financial crisis, Hayes was trained in a traditional Western capitalist framework, where failure is supposed to be punished and bad decisions are meant to carry consequences. Instead, what he witnessed was the opposite. Banks that should have collapsed were bailed out, executives kept their jobs, and asset holders were rewarded.
So I've always been a gold guy. I started buying my, small amount of gold back in 2011 when it spiked to 1,600 or whatever it was. And I've always been quite critical of all of the, the money printing that's going on. And, as somebody who is trained in a traditional kind of Western business capitalistic framework, when you enter the space in 2008 and every single bank is getting a government bailout, and you're taught that that's kind of a bad thing, but actually it was a great thing for asset holders. And, we kept our jobs, which we all probably should have been fired at all these institutions. And so, I entered the space sort of jaded already, and this is complete bullshit. And so when I read the white paper about Bitcoin, it sort of aligned with me philosophically back in 2013. I started trading it. I saw how immature the markets were. I saw that my value add was trading derivatives, and sort of started BitMEX, sort of trying to build up that space. And then as I got more into more of the, buying and holding, because, I obviously have a business that does trading and whatnot, my main thesis, and this is basically all that I write about, is money printing, right? And the different ways in which the authorities around the world try to hide it from people and try to gaslight you about why it's not happening, and, trying to make it seem like it's okay that, a house costs 75% of your disposable income and all these sorts of things all around the world. And so I think it's a global phenomenon. Unless you're extremely wealthy, you feel the effects of this inflation that every single government, regardless of whether they're, completely communist on one side or capitalist on the other, everybody does the same thing. We're all on this sort of fiat debasement boat together. And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride, and obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is, that you've missed the boat. We still have a long way to go.
What about in the near term? How are you thinking about the macro situation here and now?
It's be very interesting to see what Powell comes out with, because everybody's saying the Fed should cut. You have Trump chirping on him. You have these shadow wannabe Fed governors. Some of them are on the board. Some of them are proposed nominees. And supposedly Powell is this Volcker 2.0 type figure who's supposed to inject some credibility back into the Fed of this, nonpartisan, which is bullshit, non-money printing organization. And so he's got this situation. And on one side, there's an argument saying, okay, there's a labor market. There's all these sort of statistics you can roll out saying this is why the Fed is being too restrictive. But on the other hand, and this is what not that I have a probability weighting between the two, you have human nature, right? And you basically have this person who's been vilified for good and bad reasons in the press by his ultimate boss, the president of supposedly an independent organization. Does he get up there on Friday and say, oh yeah, sure, I cave, we're going to cut 50 basis points? on September, was it 17th or 18th? Like, as a human being, as a man, how does that feel to just be completely bitched out, and then you have to capitulate on the biggest stage in the world? So I think there's a high probability that while, probably ultimately the Fed will cut at some point, whether it's Powell or whoever else replaces him or whatever, maybe Trump fires him, or whatever it happens over the next year. But I think there's a high likelihood that Powell sticks it out and just says fuck you to Trump and doesn't cut, just because he's a human and human beings don't like to be put in these sort of situations. And I've been having this argument with a lot of very senior and prominent macro writers who, point all these reasons why Powell has to cut, and, why his job is so, uncomfortable, being sort of the foil at which Trump launches all these tirades against. But at the same time, what a better way to prove that you are an independent monetary actor than just say, no, I'm sticking with my guns. I think that 4.25 to 4.5% Fed funds is neutral, and fuck you, Trump. And because I'm Jerome Powell, I'm an independent head of the Fed. So I think there's that continuum. I don't know where it's going to come out. It ultimately doesn't matter. But I guess if you're a trader, then obviously this is a very important speech you'll give on Friday.
Yeah, so it's the pride thing that's nipping at him. As much as we try to say that we're not prideful, I think that's just generally human nature. So does that mean you're risk off right now?
No, I'm still pretty much fully invested, just because, again, I don't have a monthly P&L target to make or a yearly P&L target to make. I don't want to overtrade. Obviously, everyone falls victim to that of sometime trying to take 5 or 10% off the markets. I'm going to buy back in, But you just end up paying more fees to your brokers, and I'm just going to sit back. And Powell comes out and says I'm not raising, or doesn't talk about cuts at all, and market tanks 15-20%. I've got some extra cash, and I'll be going shopping on some things that I think are cheap, just because I think that Trump and Besson are just setting up such a perfect situation for how money is going to be printed post 2026 in May. And I guess listen to a CNBC interview with Zarvos, one of the Fed chair hopefuls, and if that guy gets in, Bitcoin will be at 15 million, because he's just going to do yield curve control, printing money, immediate 300 basis point cuts, all sorts of things. So I think Trump and Besson have laid out exactly what they want to do: run it hot, inflationary, all these sorts of things. Powell is the only thing standing in their way, and come hell or high water, Trump will get what he wants. The question is, how difficult is it? Whether he has to fire Powell, or, there's just ways to do it.
Despite the uncertainty, Hayes is not risk-off. He explains that unlike traders chasing short-term P&L, he doesn't feel the need to overtrade. Trying to capture every 5 to 10% move usually just enriches brokers and increases mistakes. Instead, Hayes prefers patience. If markets sell off sharply after a hawkish Fed message, he's happy to deploy capital into assets he believes are fundamentally mispriced, because his conviction lies beyond the next meeting or headline.
I think essentially there's two pools, and you mentioned one of them, sort of these foreign retail deposits. There's two pools of money, which I think best via monetary policy and aggressive use of terrorizing sanctions can make people on board in the stablecoins. The first is the euro-dollar market, right? So, 1950s and 60s, euro-dollar market was created because of all the regulations and prohibitions around interest payments and trade flows that the U.S. Monetary authorities were putting on commercial banks. And so you had these foreign branches of U.S. banks and foreign banks saying, hey, I'll take your dollars outside of U.S. control. And so we have this $10 to $13 trillion market, which nobody has any control over. Oftentimes influences Fed and Treasury policy in terms of when dollars become expensive and cheap in the euro-dollar market. And you can probably trace almost every financial crisis outside of the United States to euro-dollar market flows. And these flows are not doing what Besson wants them to do. He can't control them. He doesn't know where they are. He can't make them buy what he wants, which is Treasury bills. So my idea, and maybe he'll do this or maybe he won't, I don't know, is right now, why do you feel comfortable in a euro dollar? Because every time your banking institution has gotten into trouble, the Fed or the Treasury bails you out, even if technically they shouldn't be doing it so, because you're not a member of the discount window, don't follow U.S. regulations. But we can point to many even 2008, the Fed secretly bailed out all these foreign branches of banks for all their bad trading policies to make sure the euro-dollar depositor was sweet. So the first thing Wealthion should do is say, hey, guess what? If you don't have your money in a U.S. branch of a bank or a U.S. bank inside of America, you do not have a guarantee any longer. We will not come and save you anymore. So all of a sudden, these dollars like, oh, okay, well, there isn't this blanket government guarantee from the Fed and the Treasury for these trillions of dollars that I have deposited on these banks. But I could put my money into a stable coin. And a stable coin means that the dollars are either a deposit at a U.S. branch of a bank in America, or they're holding Treasury bills. So if you don't feel safe in your Deutsche Bank account in Switzerland or wherever, just talk to your authorized participant and move these deposits over to a stable coin. And now you have access to your dollars. You have the blanket guarantee of the U.S. government. And guess what? You might earn a bit of a yield on your money, because we probably don't get much of a yield in a euro-dollar deposit outside of America, because the banks don't actually need your money and they have to pay capital charges because of Basel III and blah, 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 right? All the bad things about why banks don't like large deposits. And so now you have, a $10 to $13 trillion TAM of money that could flow into stable coins from abroad. And once you're in a stable coin, Wealthion has full control. He knows where you are, which bank. He knows where you're clearing your treasuries. And the best part is he can offer you a yield that's lower than Fed funds. So if Fed funds is 4.5, he can say, oh, guess what? I'll give you 2 on a 6-month T-bill. And you say, well, I can't really do anything about that because I'm not going to go into a U.S. bank deposit. The banks don't even pay you anywhere close to Fed funds. So fuck it. I'll just buy the 2% that Wealthion offers. So Wealthion can, in one fell stroke, completely neuter the Fed. And no longer does the Fed have any control over Fed funds, because Wealthion can offer the Treasury bill at whatever price he wants, unconstrained by what Powell or whoever his successor does. So that's the first pillar. And the second is what you mentioned, right? You have a lot of retail around the world in developed and developing countries. I live in Asia, and basically the entire investment game out here in Asia is how do we get local currency into dollars so that they can buy higher yielding assets and equities. That's literally all of finance in Asia. And then every so often the regulators come after people and they basically put the young guy in jail, and the boss stays sweet as they do. And that is the game. So Wealthion could say, okay, guess what? We're going to deputize Elon Musk and Mark Zuckerberg and give them protection to go and offer a stablecoin bank account through their WhatsApp, your Instagram, your X account. And we don't care if a foreign regulator, whether banking or internet regulator, says, we don't like this. We don't like that you're basically giving a dollar bank account to our entire, underclass or anyone who's not a wealthy individual. And, they don't care because they're sitting in Hawaii and Austin, Texas, and Trump is protecting them. And if you go and you try to remove access to Facebook or X, guess what? Sanctions, just like what Trump threatened with Europe when they had their Digital Information Act or whatever it is. And then furthermore, Wealthion finally has a sanctions weapon, right? So if you're in Asia or a lot of developing world, all the elites essentially steal from their people and put their money in US banks in some way, shape, or form. And so guess what, president or prime minister or parliamentarian, if you don't allow Western social media companies to bank all of your people with dollars, I'm going to sanction you and you're going to lose access to the billions of dollars that you stole from your people. And so guess what's going to happen? Nothing. And so I think that is how you're going to get, sort of like $20-25 trillion TAM of money that could flow into dollar stable coins. And I think they're hinting at this already in terms of, you have the major social media companies saying, oh, we're investigating stable coins and this, that, and the other thing. And, Wealthion's very pro on them. And then basically what does a stable coin do? They're going to buy treasury bills and they'll buy it at whatever yield Wealthion offers. He can completely destroy the Fed. He can put, short-term rates wherever he wants it. And now he's got a sink of tens of trillions of dollars that he can essentially fund the U.S. government with until they do some sort of yield curve control to bring down the long end. So I think that's what I would do if I was Wealthion. Now, I think they're on the path. Whether or not they get there, who knows?
Arthur Hayes' message is uncomfortable, but consistent. The system is not broken. It's working exactly as designed to protect power, preserve incumbents, and debase currency silently. Bitcoin exists because of that reality, not in spite of it. Stablecoins may become the next tool of empire. The Fed may lose relevance. Money printing may accelerate beyond anything we've seen before, and in that world, Bitcoin isn't a speculative asset.